Hello again, everybody. Welcome back to Inside Lowell and another one of our podcasts. I am your host, Teddy Panos. Excited this morning to welcome in a special guest. You've heard me talking an awful lot about Washington Savings Bank on all of our podcasts here and on Inside Lowell. Today, we're actually going to talk to the president of this Lowell landmark institution. We're going to talk a little bit about Washington Savings Bank, but really we're going to talk about something that is in national and now international news, and that is fears of banking system collapses. Are we going back to 2008 and 2009? Where are we? We're going to talk about that and talk about the importance of what your local banks, like Washington Savings Banks, are doing to keep you and your investments, your money, safe. Before we start that, I want to thank all of our sponsors. One of them, Washington Savings Bank. You see me here with my mug all the time, gang. There, I got this for opening up my first account at Washington Savings Bank. I got an umbrella too. Who knows? Maybe they'll give you something if you open up. I'm kind of a big deal, so don't take it personally if they don't give you two things. I'm kidding. They know how to treat their customers right. More importantly, when I opened my second account, it literally was done quickly over the phone, a couple of texts, a couple of emails, an e-signature, voila. I've got a new bank account and I've got a new debit card at Washington Savings Bank. It's that easy, but when you know your customers and you know your community that well, it's pretty simple to do it. Washington Savings Bank. Branch in Lowell, branch in Drake at WashingtonSavings.com. Right on cue. There's their logo on our screen. Check them out. Also want to thank our friends at Hafner's. We're still in winter, and you know, home heating is a top of mind for many Greater Lowellians and many New Englanders, and it always should be, given the harsh New England winter. We got lucky this year, but we did have some cold stretches, and folks who heated their home with Hafner's heating oil and propane, they never had that worry. Hafner's offers quick, reliable, and friendly service. They also offer great options like auto pay and auto delivery to make your life easier. Plus, Hafner's gas stations, convenience stores, and car washes can be found throughout the Merrimack Valley and southern New Hampshire. You see the logo behind me. It kicks. They kick. Call 866-IT-KICKS or visit hafners.com to learn more. And last but certainly not least, thank you to the other logo over my shoulder here, Reverie 73. Visit them at 1148 Bridge Street in Lowell, or you can order online at reverie73.com. Now, what is Reverie 73? Well, it's a cannabis dispensary, but not just any cannabis dispensary. You'll know the moment you see the store, the moment you step inside the store, it stands out. It's bright, it's beautiful, it's clean. Their staff is friendly, and they are knowledgeable, and they are willing to go the extra mile to explain their products to you. And it is a new industry, and a lot of folks don't know what they're talking about when it comes to it. Yours truly being one of them. But I do know that Reverie 73 is sure to elevate your cannabis experience, whether you're new to the world of cannabis or a canna connoisseur. Again, visit them 1148 Bridge Street in Lowell, or order online at reverie73.com. And with that, finally turn my attention to the official title, president or
president and CEO.
President and CEO. That means you get double the pay, right?
That's right. Yeah.
James Hogan from Washington Savings Bank. Thank you so much, President Hogan, for joining us here in studios, and thank you for your and your bank's support of local media as well with us here at Inside Lowell.
We definitely feel it's important that the community has a voice and, you know, a visible means of communication. And we think that you folks are doing a great job with that right now.
Well, we certainly appreciate that. A lot of folks have been talking about what happened with SVB, Silicon Valley Bank out in California. It collapsed. Another one collapsed that not many are talking about. We may get into that, but now we're hearing concerns internationally that Swiss Bank is in some trouble as well. And people are getting nervous, and I know because all of the local banks are sending out e-blasts and doing social media notifications to their customers. And you guys have done the same at Washington Savings Bank to let them know what exactly is going on and what exactly you are doing and have done through your existence to make sure we don't have a similar situation. So talk to the folks, first of all, who do their banking with Washington Savings Bank, and I guess by extension, everybody else who's banking here locally in Lowell and Greater Lowell. What's going on out there, and should we be concerned?
As the average customer of the average bank in Greater Lowell, the average customer of Washington Savings Bank, absolutely not. There's no reason for you to be concerned at all. The operations of all the local banks are continuing as usual. It's just a regular day of banking in Lowell. And the banks in this area, including Washington Savings, have done, we've been through the financial crisis. A lot of it, a lot of the banks previously weathered other financial crises, as well as even some like ours went through the Great Depression. And so we had the Great Depression, the Great Recession, and everything in between. So banks locally, we manage multiple lines of business. So we are not simply the bank of high tech. We're not simply the bank that deals in crypto. We are local banks. Our bank deals with regular customers that live in this area. And some of those customers are wealthy, some of those customers are not so wealthy, and some of those customers probably struggle financially day to day. And we're here to serve all those customers. And we're not stuck in one line of business with one line of customers. And I think to set out an immediate differentiation, this particular, if you want to speak directly to Silicon Valley Bank, they had their average customer, their average account balance was $5 million. Wow. So I can tell you that's not the average bank customer in Lowell. And you shouldn't feel bad if you're not in that category. So in that regard, 93% of the deposits were not federally insured at that bank, which is what really prompted the crisis. And they had payroll companies that worked with them. So they had payrolls for just regular workers at regular tech companies. I actually know someone who was impacted, who didn't get paid for several days while their pay was held up through transactions at that bank. And we are all local banks. Washington Savings is a local bank. It's locally managed. We know the communities. We know the people. We know how to bank in Lowell. Differentiate that with Silicon Valley Bank. They had 18 offices, and a number of them were international. 5 of them were concentrated in Massachusetts from a bank that they had acquired. I think they had a partnership with a firm in China. They were in Israel, and I think a couple of spots in Europe. So they had a small footprint of offices, but they catered to very high balance customers. And the high balance customers were all concentrated in the same industry. They used the same financial advisors. The average customer at Washington Savings Bank doesn't have a team of economists or financial advisors advising them. They come in and they expect their money to be there. They expect it to be covered. And we run about 80% federally insured deposits, where this bank in California was running with 93% uninsured. They only had 7% of their deposits covered. That's an
astounding number, given what we went through in 2008 and 2009, when we were told this, we're going to make sure this never happens again, right?
And then in Massachusetts, we have a unique program, which is the Depositors Insurance Fund. And that covers, it's a voluntary membership and requires us to pay in for additional insurance premiums, but that provides full coverage for all your deposits. So all deposits are fully insured, 100% insurance coverage, if the bank is a member of the Deposit Insurance Fund. Some of the credit unions have a similar facility, but I'm not at a credit union, so I can't really speak to that. But the banks that prudently manage their book of business. And then what happened was the Silicon Valley Bank, like all banks across the country, had a big bump in deposits from the economic impact payments. And with that big bump in deposits, they found themselves needing to put that cash to work. And people were hesitant to take out loans in some cases because of the uncertainty surrounding COVID and shutdowns and lockdowns and time to recover and such, and staffing constraints. So it ended up that they were sitting on deposits. They invested those deposits in U.S. Treasuries. And if you said you're investing in a U.S. Treasury, that's about as safe of an investment as you can buy. And you would say that makes a lot of sense. And as a banker, I can say that's about the, if we tell a bank regulator we're in U.S. Treasuries, they go, oh, okay. That's a very, very safe and stable investment. However, as a bank, you have to look at it a little differently and sort of manage the time horizon. When you're going to need cash, when, what's going to happen with your book of business, when do you expect to have cash on hand? When are you going to, that's our inventory. As banks, our inventory is cash. So you have to plan for when you need a lot of inventory, when you don't need much inventory. So we ride that inventory, and you have to know, if you invest for 30 years, you're not going to have that money back for 30 years.
So a lot to unwind there. And I think if we could just step back for one quick second, because a lot of folks I found don't understand how it works. So you talked about your inventory is cash, but you kind of have to send that cash out there and make it work by giving loans or putting it in treasury bonds or whatever. So the crisis comes when people lose faith that when they need their money, they'll be able to go get it. Or now you said the money's insured, but that doesn't mean that the folks who have their money insured are going to be able to pull their, let's say the number's 250,000 out that first day if everybody decides to pull out $250,000 that first day, correct?
Correct. And we, as bankers, we manage that inventory. And when I say cash, our inventory is cash. Over the years, the amount of physical dollars, dead presidents as some call them, that we have in the vault has decreased dramatically, as has every other bank. The payments all move electronically. So we talk about, cash, and really our cash account is the Federal Reserve. And that's where the balances run through. If a check clears against a different bank, payments process, everything runs through the Federal Reserve. And this particular bank in California, their balance at the Federal Reserve, they overdrew their balance at the Federal Reserve by $1 billion with a B dollars. Wow. And I don't think I'd be coming into work the next day. Let's put it that way.
Yeah. They also kind of, I've had some things I've read where they created the panic themselves by some of their actions, which may or may not have included the bigwigs selling off stocks, which was the first telegraph. But basically, the message went out there to people: this bank's in trouble. You better go get your money out of there. Which once everybody does, you now cause the crisis. How secure should people be? How safe should they be that this will not expand to many others, as we saw happen in 2008, 2009?
If we had 10 customers come in and close out their accounts today, I hope that doesn't happen. There'd be no reason for that to happen. But it would probably be something in the range of $8,000 or $10,000 if they close those accounts combined. And in this bank in California, if they had 10 customers close out, that each had the average balance $5 million, that's $50 million. Well, obviously, they were a much larger bank than Washington Savings, but still, they have more customers. So instead of them having 10 customers and us having 10 customers, and one of the differences with this sort of panic that set in was it was driven in part by some financial advisors that told some of their large customers to move money. And in the old days, if there was a, quote, run on the bank, the run would be a line at the door. Some of these branches had lines at the door, but most of these banks had money managers just clicking in their online portal, moving the money. And my understanding is that at some point they got a, can't process or the wheel of death, as we say on the screen, that the transactions just wouldn't process because so many people were online trying to move money. And then the bank had to sell all those treasuries. And with the changes in interest rates by the Fed, those treasuries were underwater. So they lost $2 billion when they went to sell the treasuries. And that, again, and basically they sold all of their investments on hand at a $2 billion loss.
We are chatting with Washington Savings Bank President James Hogan about banking and the crisis that is out there. When it starts leading off network news coverage and it kind of pushes the politics to the side, people should start paying attention. Unfortunately, you can't take the politics out of it because now the blame game has already begun, and you got some blaming deregulation, the loosening of the Dodd-Frank, blah, 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 and then ultimately it's Donald Trump's fault. On the other side, I've seen everything from blaming the bank, exactly what you spelled out, to people saying, well, they invested $74 million into their woke causes, and so naturally it's a political battle. I saw something yesterday that I found interesting, and if true, though, might portend that we're not necessarily out of the woods yet with other big national players. And that is, somebody talked about the dynamic of the inflation and the interest rates and what that kind of does behind the scenes to some of the stuff you were talking about, the bank's investments and needing to sell treasuries and whatnot. I'd be lying to you if I said I fully understand it. Have you kind of heard some of that? And how can you kind of explain that to the average Joe out there like me? Like, is this a dynamic of where we are economically with still very high inflation and yet interest rates that the Fed is continuing to say we're going to keep raising them?
Well, there is a school of thought that says that rates are going to have to continue to rise. Yesterday, the Fed fund futures were pricing in lower rates by the end of the year. Now, that's the sort of a dichotomy between what as they call it, Fed speak, which is sort of when there's certain reporters they go to that's pretty reliable information. Nick Timras at the Wall Street Journal and a few others. So there's a dichotomy between what the Fed is saying and what the markets believe is going to happen. And the markets believing that rates are going to fall, that may bring, some of the mortgage rates down and whatnot. But to the average consumer, what happens behind the scenes is they make a deposit at the bank. The bank then takes that money and funds loans with it, buys investments with it. And depending on the day, it goes to different reasons. And in this situation, they were focused in one industry with really one kind of customer, tech executives, high dollar tech executives. And I'd almost equate it to, for those that are old enough to remember, the issue when Wang Labs was in Lowell. Everybody either worked at Wang, had relatives that worked at Wang, or worked for a vendor that provided service to Wang. And everybody had something, somehow, some connection to Wang. And when Wang Labs, if you want to call it imploded, collapsed, or ceased to be Wang Labs, that impacted, in some cases, multi-generational households. And this is the same kind of thing. It was a complete concentration in that industry. And people, I think, were investing in things like crypto that they really didn't understand. And the fact in this case that it was tech people, they were out on social media ahead of the thing. So it exploded on social media before anybody could control it. And I think the bank came out and made a statement that really, I think, incited more panic than, but as I said to you to start this out, it's a regular day of banking in Lowell. There's no run on any bank in Lowell, nor should there be. Everything's completely controlled. It's the same as it was last week. It's Thursday this week, Thursday last week was the same.
And it's important to note that even when things started to spread to other big banks back in 2008, 2009, the local banks, because they don't play in the same arena as these national and international behemoths do, survived quite fine. The lesson there being, if you're doing business in Lowell, in Greater Lowell, in Drake, wherever, it's wise to do business with a local bank, and it probably even wiser to do business with one that's been doing this for 131 years now. By the way, happy birthday! You guys look great for 131.
Thank you. Thank you.
But it is a different. Local banking is a different animal than what we're
Yes.
talking about here, is some of the numbers that you are talking about spell out quite clearly.
We have to serve the community. We have to know the community. We have to know the people, and the people know us. If you walk into one of the local banks, including Washington Savings, you can speak to people in management. You can call and get a human on the phone, and that's not the case with some of these banks. And then when it's all tech-driven transfers, it's much like with the stock market. Some of the real wild ride days on the stock market are automated trading. It's not a human doing that. It's a computer thinking if X, Y, and Z happens. And that's exactly what happened here, was that some of the big money managers told them to move money, and they moved it very quickly, and to the point that it caused the problem.
Are you fairly confident that it's not going to spread like wildfire? I mean, there is another bank, Signature Bank, that I want to get to in a quick second. But are you confident that we've kind of seen the worst of it? And did the federal government take adequate measures to ensure that it doesn't spread?
So there's a two-pronged piece to that. The federal government did, take very strong and decisive action. The Federal Reserve, in combination with Treasury and other leaders. But and sometimes when they come up with those programs, like when they had that TARP money out in the financial crisis, people were afraid to take it because they thought there was a stigma attached to it. And they're putting that out there. It's a regular thing where there are wholesale lenders that lend to banks, and that's just part of, as I said earlier, cash. Well, electronic cash is our inventory, and we routinely move money back and forth, and that's a normal part of banking. And so when you have something that goes haywire in that normal part of banking, there's no reason for any concern with the local banks. They don't have exposure like this. They don't have concentrations of in a certain industry, or concentrations with a certain type of customer.
So have you taken any other measures just to kind of prepare for if this situation gets worse? Have you taken any measures at Washington Savings?
At our size, we can actually talk to customers. We've had a few customers that kind of have some questions, and those questions, they can sit and talk with somebody and address those questions. We put out some posts on social media. But again, for Washington Savings, it's a regular banking day. There's no, there's money in the vault, there's cash in the account. There's a bunch of loans closing this week, a bunch of deposits come in, and it's just a regular day of banking.
Isn't that amazing? If you do business the right way, you generally, every day becomes a regular day of doing business, whether it's banking, food service, construction, or whatever. It's the folks who start to, get a little risky and do things they probably shouldn't do if they're not prepared to fail. That's where you start to get into trouble, right?
And I mean, if you probably took a 1 or 2 hour seminar on investing, never mind, a degree in finance or a graduate banking program, something. It's about diversification. You want to diversify your customers. You want to diversify the types of loans you make. You want to diversify the types of investments you make. And, at our bank for years, we've monitored our liquidity, which is what this is, run on the bank problem caused by lack of liquidity. We monitor our liquidity. That's reported to our board regularly. It's reported to management, the executive committee, on a monthly basis, and we stress test. They talk about stress testing. We've stress tested for years, and so we look at different scenarios. What if rates go crazy high? What if rates go crazy low? What if they drop real fast? What if they increase real fast? So what's happening now with interest rates, we've had that modeled out for quite some time, that if this happens, this is going to be the impact on the bank. And, that it's amazing to me that a bank, billions of dollars larger than us, seemingly didn't have a lot of that monitoring and a lot of those controls in place.
Yeah, and the part I saw that was kind of saying it was the kind of the perfect storm of where we are within the combination of inflation and interest rates, kind of said they actually did pass their stress test, and the person who wrote it was trying to explain how you can pass your stress test one day and then basically fail the next. But again, some level of risky behavior to have 93% of your deposits be uninsured is just sheer insanity. And for somebody who knows as little as I do, I can tell you that's not a good dynamic.
And you think that it's 93% uninsured at that bank, and at little old Washington Savings Bank and Lowell, it's 100% insured. And so how can we do that? And they were not able to, and they were written up as one of the best banks in the country, one of the biggest banks in the country, and they were doing everything right. They were doing everything right on the marketing side. They were getting all the attention, and everybody wanted to bank there because that's what all their friends did. And it's kind of like peer pressure. I think part of this, to get into that bank and deposit at that bank and borrow from that bank, was peer pressure. And then when it came time to get your cash out, it was also peer pressure. So the peer pressure is what made them who they were, and the peer pressure collapsed.
You mentioned crypto. People were throwing their money into crypto, having no clue what it was. Tom Brady told them in a Super Bowl commercial a year and some change ago. Is Washington Savings play in that that stratosphere?
Absolutely not. Absolutely. We as they say, stay in your lane. We're a local bank. We take deposits and we make loans. We're there for our customers. And, some people believe in crypto. I think it's still too soon to tell. There's talk about a central bank, digital currency, and, we could do a whole podcast on that. But that bank in California was a reserve bank for one of the cryptocurrencies. So they held 20% of the reserves. So if that bank had been allowed to fail, and if those deposits were uninsured, it would have also started a crypto collapse for one of the cryptocurrencies, or it would have destabilized. I mean, I don't want to say collapsed it, but it would have destabilized one of the cryptocurrencies.
And hence, this is why you're sitting here, cool, calm, and collected today, saying just another day of banking where you can come talk to me.
Correct.
As opposed to talking to regulators and perhaps investigators who are trying to figure out how to throw you in jail and blame you for what happened. Before we sign off here, Signature Bank. Why is nobody talking about Signature? It's all SVB, Silicon Valley.
Signature Bank was the third largest bank. They failed on a weekend, and they were into crypto. They were into tech. They branched out into Silicon Valley. So they were out in the same area. They were doing a similar kind of banking, high net worth individuals that were all being managed by the same money managers and the same handlers. And, and a lot of people have talked about the protections of Dodd-Frank and financial reform after the financial crisis. And ironically enough, Barney Frank, as in Frank from Dodd-Frank, has been on the board of Signature Bank from 2013 until they failed this weekend. So
the guy they named the legislation, which was supposed to stop banks from failing, served on a bank that failed.
Correct. And he was chairman of the House Financial Services Committee for years. Dodd was chairman of the Senate Banking Committee, and they worked together on all this reform legislation. And and one of the former New York State, I believe they call it the banking division, but basically the head bank regulator for the state of New York, also, the former head bank regulator for the state of New York, also served on this board. So it was kind of ironic that they were, in this position and get into so much trouble.
Great, crazy times indeed, but business as usual at Washington Savings Bank. So, last year you celebrated 130 years. You're now at 131, so no big deal. But you had a phenomenal offer that I think people can still take. Lowell and Drake residents can still take advantage of through March 31st, right? Get $1,000 directly deposited into a new account and get $300. Sounds risky to me. You're giving me $300 for doing nothing.
That's what we want local customers, and we want local business, and we want to be there to serve people for their financial needs.
Any other big initiatives coming up this year? Any new products or services you can give us a sneak peek of?
I think sometimes we talk about how we look at strategic plans and stuff, and it's boring. Sometimes it's the same, and it's the same because what we do works. What we do works for us. It works for the community. It allows a good relationship with us in the community. How we give back to the community. How we volunteer in the community, and it's a good fit. So, at some level, we're not out there chasing cryptocurrency because we don't think that would work for us. So our model works for us. It works for the city. It works for the towns, and it works for the customers.
And again, we preach it all the time, folks. Local, local, local. Here's a perfect example of where it pays off. We're lucky in Lowell because we're large enough to be able to meet everything you need to kind of do business or to bank or anything that you need to do. We're large enough to be able to find a local company that can do all that. Washington Savings Bank, one of the prime examples of it. President Hogan, thank you so much for joining us here.
And like I say, stay calm. There's nothing going on in Lowell that should raise any concerns. Nothing.
And if any of your customers have any questions, they can pick up the phone and call, or stop in at your Lowell branch or Dracut branch, and some human being will talk to them. You won't get a recording and be placed on hold for a half hour.
If they call the phone number, they will get a human. Yes.
Invaluable. Thank you.
Thank you.
Have a great day. And thank all of you for joining us here on Inside Lowell, as we like to say. At Inside Lowell, if Lowell is your home, we are your place. Thanks for joining us. Till next time, everybody, stay safe.